All three major American stock markets have closed down for the day after President Trump took questions about tariffs.
With us, you start having cards. Right now, you don't have your playing cards.
The brand new Department of Government Efficiency, DOGE. Perhaps you've heard of it.
Hi, it's Maggie. Ever since Trump took office, we've seen a series of bold and unexpected moves, from Musk-led DOGE layoffs aimed at cutting government expenses, to imposing a 25% tariff on Canada and Mexico, and even a heated argument with Ukrainian Prime Minister Zelensky at the White House. But what's Trump's endgame? What impact will his actions have on the US economy and the real estate market? So in today's market report, we'll first review Seattle's February real estate data. Then we'll analyze how Trump's latest policies might affect the housing market and what potential risks 2025 could bring. Finally, we'll answer some of the most common questions from the comments. Before we dive in, I'm Maggie, leader of one of Seattle's top real estate teams. Last year, we closed 148 deals, totaling 180 million in sales. Whether you are buying a home, relocating, or investing, we are here to help. Let's talk about what's happening in Seattle's real estate market this February. First, home prices. The median price in King County is $822,000, down 0.7% from last year. However, the price per square foot is up 3.2%, now at $552. Single-family homes dropped 0.8%, while condos jumped 13.2%. Why? Many new cottages, dadoos, and airspace condos have been built, increasing the average condo price. Next, inventory. More homes are available now. New listings are up 8.6%, while home sales increased 10.8%. The total number of active listings grew 40%, bringing supply to 1.9 months. This gives buyers more choices and less competition. The east side has the biggest inventory growth, leading to a slower price increase. Finally, mortgage rates and inflation. The 30-year fixed rate is 6.76%, slightly lower than January's 7% peak. Core inflation rose 3.3%, slightly higher than expected. Overall, as inventory continues to rise, Seattle's housing market is showing clear signs of slowing down, with the east side experiencing the biggest shift. More listings are hitting the market, but price growth has noticeably weakened. And in our own experience, several east side homes we recently listed haven't received the same level of inventory as last year. While they're still selling, the process is taking longer. So this trend indicates that buyers now have more leverage, making it essential for sellers to price realistically and for buyers to stay patient and look for good opportunities in the changing market. Now, let's take a closer look at how Trump's policies are affecting the economy and the housing market. First is the tax cuts. The Trump administration has reduced both personal and corporate taxes, aiming to boost disposable income and business investment. While this may stimulate short-term growth, it also increases the federal deficit, which could push interest rates even higher. Higher interest rates mean more expensive mortgages, making home ownership less affordable. Next, tariffs on imports. Trump has imposed a 25% tariff on goods from Canada, Mexico, and China. And this is meant to protect US industries, but it also raises prices for construction materials like steel, cement, and lumber. As a result, home building costs rise, leading to fewer new homes and higher property prices. And this could slow down housing supply and make affordability even worse. Lastly, government spending cuts and layoffs. The administration is reducing federal budgets, leading to mass layoffs in agencies like the Department of Veterans Affairs. Job losses can lower consumer confidence and reduce home buying demand. If layoffs extend to tech or aerospace industries, cities like Seattle could feel an even bigger impact. When people feel financially insecure, they hesitate to buy homes. And this could slow down real estate activities, especially in areas where job losses are high. Because of these policies, market confidence is very shaky right now. Over the past 2 weeks, the S&P 500 dropped 6%, erasing all gains since the election. The Dow Jones fell over 500 points in one day. Tech stocks like Nvidia and Marvel Technology took major hits. There are some people who believe that Trump actually wants a short-term recession. Why? Because if the economy weakens, the Federal Reserve might be forced to cut interest rates, and this will lower government borrowing costs, helping to manage the $36 trillion national debt. And what this means for real estate. The next few months will be critical. If inflation keeps rising and the job market weakens, the US may officially enter a recession. For real estate, mortgage rates can stay high, making home buying harder. House demand may drop, slowing price growth. Sellers may face longer listing times and increased price pressure. If the Federal Reserve lowers interest rates, the market may recover temporarily, but uncertainty remains high. For buyers and investors, staying informed and acting strategically is key. So, is it still a good time to buy a home this spring? This is one of the most common questions from our clients, especially given the current economic uncertainty. So here's what I'm going to say. If you're looking for a primary residence, and this market actually offers more inventory and more choices than before, quality homes remain scarce, so having more options is a great advantage. And nobody has the crystal ball, so if you find a reasonably priced home, I believe it's completely fine to move forward with the purchase. Just make sure to buy in a great neighborhood to ensure the home's long-term value holds up. Overall, while the market remains uncertain, the key to buying or investing is to stay informed, tour more properties, compare options, and plan your finances well. If you do that, you might be able to find a great deal. That's it for today's update. If you have more questions about Seattle's real estate market in 2025, feel free to leave a comment below or message me directly. And don't forget to like and follow our channel for more updates. I'm Maggie. See you next time.